thank you very much, and my pleasure to be here this morning. My colleague Jerry Brownlee's just snuck off. He's got to get back to Parliament to lead our efforts in the House at 2 p.m. when the Parliament starts again. But I do want to acknowledge President Chris Black and the Insurance Council members and all of you here in the industry today. I thought, before I got into the detail of the consumer and regulatory side, I'll just step back and just take a couple of minutes to talk about the broader economic picture, because I think in the last month or so we've seen two pretty significant events in New Zealand's economic situation. Firstly, the fact that we announced that we had achieved a surplus in the last financial year. And you might ask, well, why is that important? Okay, we're positive 400 million or so in a government budget of 70 billion. We could have been minus 400 million or plus 400 million. It's a small margin on such a huge figure. But it is important because it sends a signal, and the signal is that we've got a government which is competent and stable and has financially sustainable policies in place. Because personally, I think the most important thing that a government can do is to provide a stable, predictable and sustainable environment. And if you do that for an extended period of time, then that leads to greater levels of confidence in society and in the economy, and it's confidence that ultimately leads people to make investment decisions, whether it's hiring an extra person or buying some plant or investing money in a new speculative venture. And it's investment that ultimately leads to growth and jobs and rising living standards that we all want. So that's that cycle from stable, predictable and sustainable government management leading to higher levels of confidence, leading to investment and leading to growth and jobs, I think is the most important thing that a government can do. And I'm proud to be part of government that's done that over the last 7 years, and I hope we'll get an extended period to carry on. The other thing was the announcement of the agreement around the TPP. And if you step back and look at New Zealand's economic history over, I grew up and I constantly hear that back in 1951 we were the third richest country in the world, and it's all been downhill since then, which is a kind of a strange figure to draw on. Yes, we were one of the highest living standards countries in the 50s and 60s, primarily because most of Europe was recovering from the Second World War. But certainly we were a very high income level country, and the primary reason for that was that we had completely open access to the UK market, and the UK was one of the richest countries in the world. And we lost that in the 1970s when the UK joined the EEC. And as a country, we were sort of in the wilderness have been in the wilderness for a number of decades, in a big bad world where nobody has to accept our stuff without putting tariffs on and making life difficult for all our exporters. And so we've been working hard to try and get back into export markets. And we made great progress in the early 80s with CER with Australia. I made huge progress 7 or 8 years ago with the free trade agreement with China, which has been one of the main things that has sustained our prosperity through the GFC and the difficulties that we've had in the global environment. And now, with TPP and the promise of much, much better access to the largest economy in the world in the US, and 12 economies representing about 40% of the global economy, New Zealand really does have the opportunity to be back in the game, and over the next couple of decades, incredible opportunities for this country. And so I think we've got great cause for optimism. And so in the broader economic sense, I think you'll all be have the opportunity to compete and carry on your business in a strong and positive environment in New Zealand. And so opening up export markets, I suppose, is one important part of the government's business growth agenda. I don't know if you spend your evenings working your way through the government's business growth agenda priorities, but unfortunately I have to keep speed with what we're up to. But basically how we go about our business is in the sense of what government tries to achieve in terms of building a more competitive and innovative economy. we've divided the task up through the business growth agenda into 6 sort of areas, which basically ask the question, well, what does a business need access to grow? And access to export markets is an important part of it, but you also need access to skilled workforce, quality infrastructure, which is so important in a place like Auckland, particularly which is growing fast. You need access to natural resources, which is why we're working around oil and gas and so many opportunities there. Access to innovation, good strong innovation framework, which is why we invest so much in the R&D sector and in order to raise the level of investment in that area. And you also need access to money or capital, and so a good investment climate. And so that's the basis for a lot of the work that I do as Minister of Commerce, and have done through the huge amount of regulation that we've introduced over the last couple of years in the financial markets conduct legislation, which is fundamentally about trying to increase the level of confidence in the conduct of financial markets in New Zealand, so that more people will feel encouraged to put their savings in that and have an alternative to the Kiwi tradition of investing all your money in residential property, but you can have confidence in the conduct of financial markets. And I think that's obviously where the insurance industry fits in, and where you here today and the companies you represent work hard to serve your customers, and you succeed in competitive markets to the extent that you give people value, whether that's through peace of mind or cash when things go wrong. And that basic structure that underpins a successful economy that we have is so important. Now, just drilling on to some of the detailed things, I would like to acknowledge the work of the industry in your Fair Insurance Code, which I've been looking at, and in setting high standards with the revised version. I'm encouraged to see the high benchmark for self-regulation aimed at providing greater certainty and confidence for consumers. In my view, generally self-regulation allows the rules of the game to be flexible and capable and adaptive to change, which is important. So it's clear that the code provides a number of benefits for consumers, including a commitment to higher standards of service in all dealings with customers. And I'm also pleased to see the requirement for members to act reasonably when faced with non-disclosure by the insured, which will, I think, over time promote greater consumer confidence. I've also noted that many of you have an interest in a renewed focus on the insurance law reform, and absolutely a well-functioning insurance sector, as nobody will deny, is vital to the well-being of us all. And as you've heard from my colleague Jerry Brownlee, the insurance contracts bill that was drafted was put on hold in 2008 following the global financial crisis, to allow for other legislative projects such as the establishment of the Financial Markets Authority and all the Financial Markets Conduct Act work, which has been a massive area of work. And then we've also had the insurance sector adjusting to the introduction of the Insurance Prudential Supervision Act in 2010, which again has been, as I'm sure many of you are aware, another major piece of work, and the effects of the Canterbury earthquakes. And so I appreciate it's been a long wait, but it's certainly been the government's view that potential law reform in the area of insurance should take into account the outcome of the review of the Earthquake Commission Act. And so once that Act is complete, which, as Minister Brownlee just said, we were hoping to be by the end of next year, then we'll consider the relative priority of the review of the insurance contracts law. That could make sense once we've got that sorted. So it's not, the long wait will come to an end before too long. And should the decision be made to progress with an amended insurance contracts bill, it's certainly, given the length of time, 8 years, the world has changed a lot since then. We'll have to step back and just review international and domestic developments before we kick on. I think New Zealand is well positioned to learn from recent reforms in Australia and the United Kingdom. So I'd certainly encourage you to continue to engage with officials, and certainly well represented by Tim Grafton and his team, and the broader industry to share your expertise in the area. In terms of minimum compensation caps for insurance disputes. I released a discussion document on that topic after hearing concerns about a $200,000 cap being applied to dispute resolution schemes, maybe being a barrier to efficient resolution of some of the residential property insurance claim disputes, especially down in Christchurch and Canterbury. And I'm aware that a number of you took time to submit on that issues that were raised in the document. I think given the considerable crossover between this issue and the wider market, the issue is now being examined further as part of the broader review of the two acts that govern financial advice, the Financial Advisors Act and the Financial Service Providers Act. So it'll be dovetailed into that broader series of reforms. So going on to the Financial Advisors Act, it's been a key priority for me at the moment. Look, the financial advisors legislation was introduced back in 2008, ultimately as a response to the finance companies' problems that we had and issues of poor quality advice damaging, in some instances, damaging public confidence in the financial advisor profession and capital markets more generally. And so those acts did, I think, bring positive changes that have improved the reputation of the financial services industry across New Zealand over the past 5 years or so. But I don't think anybody would claim that particularly the financial advisors regime is perfect as it is. And so 5 years on, I do think it is important to consolidate on good progress that has been made, but focus on how we can reduce barriers to access to advice and tidy up many of the issues that have been raised. So I see this as an opportunity to consider the long-term future of New Zealand's market for financial advice. You would have seen the issues paper that we released earlier in the year that raised the sorts of issues that we've been grappling with, such as general confusion in the marketplace between what's an authorised financial advisor versus a registered financial advisor and QFE, and the average person on the street doesn't have any interest in finding out the differences between the two, but the differences are very significant. And inconsistency around disclosure requirements, and just a general sense that has the regime as it's worked out had the net effect that a lot of people, particularly people of modest means, have actually struggled to get access to financial advice because the whole thing has become so expensive and complicated. So that was released, and we had a large number of submissions, including one from your industry body and various companies, and more detailed surveys as well of consumers. And so I've been encouraged by the level of interest. And so where we are at the moment is that, let me just quickly run through some of the key issues identified. The existing regime is generally seen as overly complicated and difficult for consumers to understand. As I mentioned, some of the terminology used in the regime can be confusing. And the distinction between what is genuine advice and what is essentially sales activity, I think is blurred potentially unhelpfully. And some of the regulatory requirements are not necessarily providing a benefit to consumers. For example, we've heard that disclosure documents don't currently contain the right information to be helpful. And I think we need to be practical in this sense. I don't know if any of you are like me, but whenever I agree to the terms and conditions in the latest app on my phone, I've never read them once, and life is too short, I don't have the time, and so you always just say yes, and so that doesn't work very effectively for me. But when it comes to disclosure, the goal surely needs to be as simple and concise as possible so that it's actually meaningful. Disclosure at the end of page 33 of a document that nobody will read doesn't achieve that. And another key concern is around the accessibility to advice and advice gaps. So, and this is broader than you, but fundamentally, for a lot of people, a lot of New Zealanders, the main connection with financial markets is through KiwiSaver, and for a lot of those clients, a lot of New Zealanders, about 80% of them are currently with banks, for example. Do we have a regime where people can get simple advice on the basic issues such as whether I want to be in a conservative or balanced account, in a way that is simple and not expensive and time-consuming. So those are the sorts of issues that we're grappling with. Unfortunately, if I'd come and give the speech 1 month later, I'd be able to give you more detail on the exact options, because the long and very cautious and careful process that we have is that we start off with an issues paper which raises all the outstanding problems with the current regime, as it were, opportunities for improvement. We've heard submissions on that. The next stage is an options paper, which I'm actively considering right at the moment, and we'll be going through Cabinet in the next week or next few weeks, and will be released in a month or so, certainly before the end of the year. And that options paper will narrow, will really, at the moment, it's giving 3 options. I don't know how it might end up, effectively between rather modest changes to the current regime through to a more significant restructuring of how we do things to try and streamline things significantly. And that will be released, and you'll be able to have an opportunity to give feedback on that. And then we'll narrow it down to our final decision, and that will be legislation. And then that goes through the whole legislative process, where you'll have the opportunity to engage through a normal select committee process. So that's where we're at the moment. So the options paper is not very far away, and I can't go into great detail about that because it's obviously a debate, or it has to go through the formal processes. But in terms of disclosure of commissions by insurance brokers, I think that certainly was a common theme raised in submissions, was whether and how advisors should disclose information of any form, particularly of conflicted remuneration to clients. And again, at the moment, it's very inconsistent, the approach. I take the basic view that ultimately, if somebody is saying that they are an advisor and suggesting that you could go X, Y, or Z, it is highly relevant to the person who's getting the advice to know that they're getting a commission for X but not for Y, and because that's fundamental to the advice that's been offered. And so we need a regime that's consistent around that. And it needs to be meaningful for consumers and accessible in a simple way. Officials will be working with consumers over the next few months to understand exactly what sort of information is useful and helpful to them, and will work with industry to work out how that can be disclosed simply and effectively. I'm also conscious that disclosure on its own is unlikely to achieve desired outcomes. It's important that advisors have the right ethical standards, which is why it's so important. The tone of the industry self-regulation is so important in that context. So the options paper will outline some possible ways to ensure that any potential conflicts of interest are managed and disclosed. And I suppose the only point I'd make is that I'm certainly well aware that it is a complex area, and one that very easily lends itself to unintended consequences of any new regime you bring up. And so I do encourage you to continue to be actively involved, and I can give you an assurance that we certainly will listen to your views on how what we propose would work in practice, so that we make sure. I think the most important thing for any politician is to realise that legislation being as it is, there's a certain percentage of it that achieves the exact opposite of what you set out to achieve, and the purpose of good governance is to try and reduce that as much as possible, and you do that through a consistent and careful series of consultations through a process, and hopefully by the end of it you'll come up with legislation that's of good quality. So certainly I hope that by working together we can produce a regulatory regime that works for the industry and consumers alike, and one that promotes trust and confidence. I think the final thing I'd say is that as a politician, I consider myself as being in public service, but I think there's no purer form of public service than to carry on business such as yours in a competitive environment. You only succeed and prosper if you give your customers what they want. And if you don't, you go out of business. And it's pure and it's simple. And so you make a big difference to the lives of New Zealanders when you do it well. And I just wish you all the very best for the rest of the conference. So thank you very much.
Thanks, Minister. Any questions anybody wants to pose? We've got a couple of minutes before the morning tea break. Any pressing issues you wish to raise? Yes, you're off the hook. Not quite so quickly. One before you go. Do you believe the level of commissions should be regulated along the lines of the Trowbridge report in Australia?
Well, those are the sorts of things that have been raised through the process. I would, I mean, I can't rule it out because we're still in a process, but I think it would be highly unlikely. I don't personally like the idea of government sort of directly regulating such things. Instinctively, our preference would be for devising a disclosure regime which is clear and simple and effective. I mean, there are countries around the world that ban commissions full stop, and I think that's probably carrying it too far. But I do think that it is very important that we come up with a regime which is simple and clear and effective disclosure.
And also, do you see any scope for insurance contracts to come back on the legislative program over the next couple of years?
Well, the broader insurance bill, yes. I mean, I do. It will come down the track once we've dealt with the EQC legislation at the end of next year. Then I think at that point we take stock, review where we got back to in 2007, 2008, what's changed since then, how's the landscape changed, and then we move on. I mean, we've had there's just been an absolute flood of change in the financial markets generally, and I've certainly coming in as a new minister this year, I haven't had too many people banging on the doors asking for more regulatory change because I think everybody's conscious that every change is expensive and it's difficult. So you've got to have a reasonably high threshold before you turn everything on its head. But there are things that I think we do need to address that have been in place for a long time. So yep, down the track, absolutely.
Sure. Okay. Any final question? We'll go to that. One from Tim at the front here.
Just one very quick one. The FAA review also covers off educational qualifications for advisors
Yep.
and standards in that area. Just curious.
Yeah, it's on.
Just curious about any views that you have in that area around the FAA.
Yeah, you're just asking about educational standards. Well, that's definitely part of it. The mix. I don't think I should probably send a clear signal at the moment, other than I think we should try and be as consistent as we can. And I think it also goes to that getting that, seeing if we can come up with ways which clarify that distinction between effectively sales activity and advice activity. And I think if we get that better organised, then maybe we might have that might make the education element of it simpler to deal with.